If you read any trading book, there's probably a chapter, if not the entire book, is about psychology and how it can affect trading. And in fact, how it can help you when you can understand your own psychology. But let's talk about how you can use psychology to help you trade better, because you can kind of see how other traders are looking at things. The first thing I want to mention is the psychology of key levels. What do I mean by key levels? I'm talking about support and resistance. And what I mean by this is the obvious levels on the chart of any stock, whatever chart you're looking at, you may see a level at $100 that's never been broken before. And finally, it's going to be broken. There's a psychological level there, right? It's never been broken before. So when it finally breaks, you may get a lot of short sellers who are getting squeezed. They're having to buy to cover. Or you get a lot of buyers buying because they think, oh my gosh, we broke 100, we're gonna go to 200, 300, or whatever it may be. That's a psychological level. That's why support and resistance really works. The same thing with support, right? If it bounces off of a key area, then it shows you there's a lot of people at that level that are interested. And that level is reacting. Meaning if that level breaks, that's gonna put a lot of people in a whirlwind of emotions, right? Especially if they're using that level as stops, which is my next point. Key levels, psychological key levels, are good to use as a benchmark on whether or not you should use those levels as key areas for yourself to determine should you get in, should you get out. And here's the other thing. You can use these levels to set pending orders to get you in when certain key areas are broken. So if you know there's a key area at $100, as we mentioned, and it finally is gonna break, but you may not be there, you can put a stop buy order, which will get triggered if $100 is broken. And you can set that order yourself with your broker. And if you have questions about that, feel free to reach out to us at Cobra Trading, because we'll help you with that and setting that all up through our live chat feature. But that's one way you can take advantage of seeing these psychological levels. You can use them as benchmarks for stop losses, for order entries, for exits. And you can also look at these psychological levels and find them on other tickers that are related to them. In other words, maybe a sector, maybe they're a pair. Maybe you look at Tesla and you look at NIO, right? These are two stocks that are in the electric vehicle space. And if you notice that Tesla is always hitting a certain level, let's just call $100, and has never broken above that, and NIO has never broken above $50, but you see Tesla finally breaking above it, some traders will use this as a signal that maybe NIO may finally break 50. They kind of use them together. That's just another way that they look at these psychological levels and say, Tesla's never been over 100, but it now is. Maybe NIO will finally go over a high level that it's never been above, because they're a pair and they're a sector. You may also hear traders talking about the whole and half dollars. And if you haven't, let me explain what that really means. It's psychological levels. If you have a stock that's at $90, then at $100, that's a key area on the chart. It's just really big on the chart, where a lot of people tend to look at $100 as a whole new future, right? If it can break 100, who knows where it can go? If it can go from 50 cents and finally break $1, who knows where it can go? If it can go from $1 to 125, then it could go to 150, because they're kind of like a magnet. The term magnet basically means psychological levels, levels that attract people. The $1, $1.50, $2, $2.50, $3, $3.50, 100, right? 100, 120. Those type of levels really have impact. But keep in mind, don't use any of these rules as, oh my God, this is gonna make me a profitable trader. Use these as guides, because you have to pay attention to the stock that you are watching, because every stock has its own personality. Some stocks are always gonna react at whole dollar levels. Some will never react. Some at half dollar levels. So keep that in mind, because if your setup appears on a stock that always reacts at whole dollar levels, and your setup is also at a whole dollar level, that can help give you extra fuel to really help you get confidence in that stock. Now you can see how you can use psychology to help you become a better trader at your entries, at your exits, or at least figure out how you want to attack a trade maybe differently or more aggressively or not at all. So if you have any questions at all, feel free to reach out to any of us at cobratrading.com. Click the live chat feature and we're happy to help you. And don't forget to share the show with your friends and colleagues. Take care.